What's up, turkeys?
Gobble, gobble.
Gobble, gobble, gobble. Just see how long y'all do it. As long as I keep doing it, or when I stop, you'll stop. Okay.
My wrist hurt.
How long will the turkeys keep going? They're not sheep; they're turkeys.
I was starting to feel like a turkey.
That's right. We have a special guest here, by the way. Bottom right corner, all the way from where? Where is that person from? That's eating his Thanksgiving meal.
From a galaxy far, far away.
Okay, there he goes. I'll introduce him here in a bit. This is Tuesday, by the way. It's not even Thanksgiving Eve. That's tomorrow. But actually, our fearless Darth Vader leader has said that we can have the day off. So that'll be good. We get Thanksgiving Eve off.
Not you.
Oh, except for me. Just because I won this week. Oops, I already said it.
I don't know. I'll get back.
He gave me a chance to say it again. All right, I'm top right corner. Obviously, I'm the Ape, Darin, retail trader extraordinaire, and to the top right we have that old Goldman guy. There's a big smile. One that brings all the institutional way of looking at things, even the language.
You're just a hater.
That's Daniel Hopwood. Bottom left, wearing the turkey and leaves shirt. He always is festive, and that's the gangster, or the bankster, excuse me. The bank gangster, and that's JPM Josh. And then the bottom right is, of course, Darth Vader, who's taking the place of Royce this week, our CEO, because Royce has bigger and better things to do. With lots of money.
I will allow it.
That's okay.
Now I'm worried what he's doing back there that we can't see him.
I know he can do whatever he wants.
Right.
I'm using the force.
Right.
Make the stock market go up more.
Before we get into all that and let him go crazy with his voice, I got to go ahead and tell you that this is. Wait a minute. What am I trying to say? Yeah, we are not financial advisors, not even Darth. And this is not financial advice. I keep wanting to say Garth instead of Darth. This information provided is
not to do that again.
is provided surely for educational entertainment purposes only. Please always consult an investment professional before making any financial decisions. So I will do the numbers. In the Asian delayed numbers, we got Dow Jones was up plus 1.43 at 47,112. We have S&P 500, by the way. That's why the green is all in the background. S&P 500 is almost a point up at 67.65. So it did get back over 67 again. We've got NASDAQ at plus 0.67 at 23,025. The dollar, yeah, I had to say it. I did not adjust to that. That's actually what it was. Dollar is back down below $1 to 99.75. We have crude oil at 58, all the way down to 58. So maybe happy traveling this week. We have gold went down just a touch, but it's still up at 41.65. We have silver down 0.36, still over 50 at almost 51. We have the 10-year that did drop under 4. We'll have to see how that does in the next couple of weeks. Bitcoin did fall, but it's back up to 87,291. It did get down in the 84s. And that is your recap of what's going on. I didn't look at XRP. I think it's what, low twos.
I find your lack of faith disturbing.
You know what? This will be a much quicker show with the one-liners. All right, let's get into this thing. The markets. We have the VIX is now. Did it come back up again? No, I guess it went back down again because this morning I thought it went up and then now it went back down again below 20. Is it at 19? I didn't even check that.
It was like 18.5 when it closed.
Wow, back to 18.5. Okay. Let's move on though. Out of that, we've got we keep grouping what the bad news is because certainly we won't hear that from the media. So we're trying to bring that to you. And surprisingly enough, it's the institutional guy that is bringing it to you. He's the one that's outlining what all the bad news is, which much mean we're about to go on a huge bull run. Because anytime institutions say there's all this bad news, that means they're trying to catch retail selling. So what you got, Daniel?
Yes, you may be on to something, Darin. So I'm going to read a bunch of headlines, and we'll dig into some of them as we go on.
All right.
So companies are borrowing or starting to borrow to build out data centers, and traders have piled on to credit default swaps, Darin's favorite thing.
Oh yeah.
On the Oracle debt they've been taking out to fund the data center, or the data center power that they've promised to OpenAI. So you're starting to see leverage be brought in to the AI play. You saw NVIDIA beat earnings, but they're sold off on that beat because they're also pivoting towards debt-based financing of the expansion of the business. We saw the S&P sell off about 5%. It might be a little bit less now with the uptick today. You see private credit stocks down 10%. Bitcoin is trading below its 365-day moving average, which you use that one because Bitcoin trades all the time, right? Versus the average of 200 trading days in the year for a regular stock. And so, it's kind of a tough crowd out there right now. We had been talking about potential cracks in the system, and over the last 2 or so weeks, we saw things start to crack. But I think Darth Vader might have some other opinions on how this is not the end of the world, or maybe you do, Darin.
Let me
might
go
have won
first.
something this week, so.
Yeah, well, let me say something first.
Real market wizard over here.
Oh yeah, right. Whatever. There was an annual report to Congress. He's coming. In the annual report to Congress, regulators found that there is over $5 trillion in non-centrally cleared bilateral repo, which is twice as much as what everybody thought. It's twice as much as what everybody thought it was, which is raising more concern on shadow banking. But it's all of this borrowing is being borrowed, from what I understand, with treasuries as leverage, and that's the interesting thing. That's what I'm just going to say and put it out there before Royce tells us the state of the universe with shadow banking, I guess, and are we at the top or not?
So we are not at the top. There is a paradigm switch that is happening, though. Unilaterally, the banks and our financial system is shifting from a debt-based economy to a deflationary economy. So instead of our money becoming worth less and less, they're switching to backup reserves, which are in cryptocurrency. And in doing so, the banks are switching. They're changing the protocols. And since the switch in 1929, where everything, the dollar basically first, I think it was 1913 actually, that the Federal Reserve came out, and the dollar has actually lost 97% of its value. So now basically they're switching to a new regime where we have a fixed amount of cryptocurrency, and they're planning on paying off the debt globally as well as the U.S. debt by switching to a deflationary system. So 21, I think, billion or million, I think it's billion Bitcoin are out there. And over time, over the next 100 or so years, there's only about a 5% supply less. By shifting all the debt into cryptocurrency, and that there's a finite amount, you can actually potentially pay off half the debt just by stopping it from deflating. So are we at a top? Are we at a bottom? Are we at a impasse in the market? It depends on how fast they transition to it. Will we see some red? Yes, absolutely we'll see red. Why we'll see red? Because there's a transition. You're selling one thing for another. Will it just be a rug pull? I doubt it. You'll start to see things basically coming up to back the stocks and the U.S. dollar and basically the rails for this new system as it rolls out. So the market, will it crash? I doubt it. Markets were made to go up, not down. So don't panic. You will see an adjustment, but overall, I think we'll survive and be better for it in about 3 to 4 years.
All right. That's a general summation. All the things that can happen in between the macro, all the minor things that can happen can definitely shake us. But he's saying overall, it's still got more to go. Did I summarize that enough?
It's going to be turbulent, but
Yeah.
we still have more to go. Volatility is going to be our friend, and we're going to play it at every turn.
Okay.
It's funny. I was reading something the other day. I can't remember where I was reading it, but it was saying that China views crypto as an existential threat to humanity, and that if like Bitcoin is adopted, that everybody's going to die. It was like a very dramatic like headline. It just makes me think of Royce, like everybody, more or less saying we're like transitioning to that, and China's like, listen, if we adopt Bitcoin, humanity is going to cease to exist. And I'm like, well, yeah, I hope that part doesn't happen if Royce is right.
Yeah, of course. So have you guys heard about Satoshis and drops and all that? The rails that's going underneath the cryptocurrency layers? No?
No.
So basically, because there are a finite number of Bitcoin and a finite number of XRP, all of the deflationary assets or digital assets that are deflationary are creating sub tokens to basically, so like you have $100, you're breaking a $100 bill. So let's say a 1 million Bitcoin turned into, 1 Bitcoin turns into 1 million Satoshi, or 1 XRP turns into 1 million drops that are basically that you can spend. So that way it's almost like having $1 million. And you're just breaking it into sub pieces, so that way you still have dollars, and it still goes, and there's still fees, and you still wind up with your same set finite amount, but you break it into smaller pieces to make sure that it's still very spendable and it doesn't stagnate. So it's a very beautifully orchestrated rollout.
Okay, Trump. You sound like Trump there. Beautiful.
Oh no, I didn't say it was huge. It's not huge.
You said beautiful though.
It's gonna be bigly. Bigly, gotta get bigly drops. Bigly.
We have Darth Trump now. No, but is that going to create a lot of inflation though? Once all these people realize that their Bitcoin is finally worth something.
No, it will not. It'll deflation, not inflation.
Because
and the reason for that is because you are not printing money anymore, it can't inflate. There's a set amount. Slowly but surely, they're going to get rid of the penny, the nickel, the XYZ until you wind up at a solid dollar. And then they're going to switch over. So we're just at the beginning. Nickels, pennies, all that's going to go away. And we're going to wind up at dollars or drops or Satoshi.
Okay. It would take somebody from outer space to give us that vision.
Absolutely.
All right. Let's move on to the next question.
The power.
Yeah. When do we get our imperial credits?
They will be fine.
That's right.
And it's Republican credits. Thank you.
Republican. Apparently Epstein funded the initiation of Bitcoin. These leaked emails are getting. Apparently Epstein funded the beginning of Bitcoin, according to these leaked emails.
Well, not good.
We found Satoshi.
Bitcoin being in the Epstein files was not on my bingo card.
Nope.
Does that mean that what's his name, SBF, whoever that dude is worked with them in Tango to create Bitcoin? The other guy. It's the other guy over. What's his name? Come on, the other guy that they interviewed and tried to take him to jail and all that stuff, and then they got out of jail. What's the other? The big.
The guy who did Silk Road.
Huh?
The guy who did Silk Road.
I don't know. It's the guy that had the other market. You you had SBF's market, and then you had that guy's market, the
Binance?
Bitcoin crypto.
Binance?
Yeah, Binance. Thank you. Yeah.
CZ?
Yeah.
Thank you. See, we can get it.
I think Jack Dorsey made it.
Okay.
A lot of
All right,
speculation on that one.
let's move on to the Fed cut. Yes or no? I know we touch this a little bit every week, but with new information, sort of. They finally are releasing information that was kept from because of the shutdown. So they released and revised, and it was always a good revision, in the past that was negative, etc. So what was your number there? I know employment went up, if you believe these numbers, but what are your numbers?
Well, Darin, we'll take them at face value for now until they get revised. Okay, it's the best we got. But let's be happy the government's open. Okay, so we had a surprise jobs increase for September of 119,000, but unemployment jumped to 4.4%. And there was a revision of the August numbers from what was originally a 22,000 job gain to a 4,000 job loss. And I'm sure this number is slightly inaccurate, but supposedly the healthcare and hospitality parts of the economy account for 100% of the job growth in the US in 2025. And just to reiterate, not youth unemployment from I think 18 to 24 or 25 is at a recent all-time high. It's not the highest it's ever been, but it's above 10%. And I believe white collar entry-level jobs are at their highest unemployment rate of 25%. So it's a very pretty large amount. And not that history is exactly the same, but you typically see that before large recessions like in 08. You see very big unemployment of kind of entry-level jobs. So essentially companies are just not hiring. And so originally when I was writing these notes, is that the Fed was, there was speculated that the Fed would potentially not cut rates come December. But I believe the market is now pricing in a rate cut. And there was, a big belief that a lot of the market sell-off was due to the speculation that the Fed was not going to cut come December. But I believe now it's an 80% chance of a 25% cut. Or sorry, not 25% cut, 25 bits, 25% of that would be a lot.
I just think it's so funny how they worked in cuts earlier in the year, and they're saying now with all the ups and downs, I guess that they're only working in the one, etc. They did work in two, etc. So I think it's wherever again that we always say that the market's going to go. That's what they're pricing in, and because they know, and they have to come up with some excuse. This whole Fed, speaking, you get half of them that want to cut, half of them that don't. And so then it's just a big mystery, and it's a big dog and pony show. But I don't have any emotions about it at all. Josh, you got anything before we move in? Move next.
I mean, it depends on what you're asking. You're asking if they're are they going to cut? I mean, the labor market is still if you listen to talking heads, they're talking about the labor market still softening and things like that. But the one thing that still gives me pause is the fact that we're still. I mean, yeah, we have some numbers, but we're still missing a good bit of the numbers that the Fed actually relies on. And then as far as inflation, it's not really going away. I think we might see a little bit of a surprise in when we start getting a little bit more spending over the holidays, might see a little bit different numbers as far as inflation, because we'll kind of, have a little bit more spending. We can kind of see how the inflation has been disseminated, kind of passed on to the retail, to the purchaser, that kind of thing. But I just think that the biggest issue is we just lost so much data, and we're still not really, we still haven't really fought all of the inflation, and it's still as sticky as it ever has been. But, with the labor market softening, I think that's we'll see how they, some of these holiday jobs, these temporary jobs that we typically get for the next couple of months. If those start softening, we might see vastly different numbers in January and February, but I don't think that by December we're really going to see the numbers that we need to actually get the rate cut. And I think that's a lot of the reason that we had so much of the sell-off this past few weeks, is because I think a lot of people had priced that, quarter cut already into the markets. And so when you get liquidity tightening, people get kind of scared.
Yep. And a lot of these earnings releases and times after that, they're saying that they're not going to hire as many people, including stores like Target, et cetera, that they're not going to hire as many extra help like they do. So it'll be interesting to see what those numbers are or are not reported in January.
Did you hear about FedEx here in Memphis?
Oh, yeah.
They're all of their seasonal workers, no seasonal workers. They've all been replaced by systems.
Yep.
That's kind of my point.
I'm not working there.
I think you may not still see those quarter rate cuts. I think some of the things that were said recently kind of propped the market up, because we saw the past couple of days, we saw a pretty significant surge in volume. Still low volume, but a significant surge in volume over the markets and a lot of green days. But all in all, I still don't see that quarter rate cut coming. And then when you tighten that liquidity, that whole circle jerk AI bubble, the circle funding that they're doing, that starts to get a little bit scarier.
And it is my experience that typically when a rate cut is actually coming, the reason it's coming is basically spending slows down far too much. And that's the only way they can influence or encourage people to borrow. So lower the rate so that way banks can give it to you at a lower rate. So that way the bank has something coming in, as opposed to not making anything if the rate's too high. They have to find out where the demand curve is.
Yep. And Trump keeps teasing the $2,000 stimulus to those under 100K, I think is what it is. It'll be interesting to see if that happens or not, and if that'll affect inflation, et cetera. There's so many things that could happen in the next couple of months. Let's move on.
Don't shake your head. You want $2,000 for your Robinhood account.
Yeah, I just exactly like I wanted the whole stimulus checks back when we had COVID.
Right.
To be fair with those, though, I got like $7, and I'm pretty sure it cost them more to send me that $7 than it was.
Yeah, that's kind of my point.
I wonder if that's what they're doing. Is they're going to give you $2,000 because they know a lot of these, these retail guys will put it right in the market to inflate the market even more. So it'll be interesting to see.
And it will, but we're just going to go right back to doing what we just did.
Right.
And wasn't it fun?
It was fun for like a year.
So you'll have another year of fun.
Yeah. Okay, fine. Yes, fine. Give me that $2,000.
Fine. All right, let's talk about the yen real quick. So we've been talking about this for probably a year, about the other shoe to drop, because we didn't think it had, and now there seems to be more and more feelings out there that it has not. So kind of square that up for us, Daniel, what you brought for us.
Yeah. So first, I just want to give props to Josh, because I think with the last 2 weeks of the market sell-off, he had brought it up again as another potential factor of, as the market was unwinding, was this in part because of the yen carry trade, what influence did it have on it? And sure enough, this week, as I was reading, looking for notes, started hearing the various news outlets bring it up again. And the reason it's been kind of brought up is because it probably is a pretty strong potential factor. So Japan has, it's been estimated that they're going to have a $135 billion stimulus package to stimulate their economy. And, with the printing of more money brings inflation. So people are more skeptical of, their debt. And so I believe the 30-year bond yield has risen to like 3.37%, where, only a few years ago it was near zero. And so, with that increase in yield, people that were borrowing in yen to, bring the money back over, presumably to the US to have greater leverage at a cheaper rate, have had to sell off, their, carry trade because the yield was costing them too much. So you saw a deleveraging in the markets. And you've seen recently that it brought the Japanese yen, if you just look at their general index, JXY, to an all-time low. And so you are seeing another unwind in this carry trade that is presumably affecting the S&P itself pretty heavily. But I think this begs the question of how big is this unwind that needs to happen? Because you're probably talking multi-billions that are being borrowed in yen and traded in other markets. And as that spread is rapidly increasing, which is not good for the people borrowing, how underwater are people potentially in these, carry trades just to borrow the money to trade that they're probably losing on their trades, let alone having to then sell those trades and then go back to a spread that no longer favors them.
All right, way to set it out there. Any thoughts there, Josh, on what might happen?
Well, you asked how big is it? I mean, I think it's fairly significant. Now, as far as trying to quantify it, I don't know. But if you look at back,
right,
kind of what we went through back in 22, 23, we had when the news was actually really focused on, yes, this unwind is because of, this is the carry trade unwind that we saw, and that was kind of all the headlines. Right now, we're not getting those headlines so much, but to me, this is kind of that, and the liquidity tightening because we may not get those rate cuts. I think are the two bigger factors about why we've had the sell off that we've had over the past couple of weeks. And I guess what I look at is the fact that we kind of saw the flight away from risk. Like we saw a move to very risk off assets, and especially in the U.S. market because we're so closely tied with the carry trade. We saw a pretty significant run to, less risky investments. And so, seeing that as a, kind of a pretty significant move away from that, I do think that the carry trade is a significant portion of why we're actually getting these. And I don't know if I don't think we're done yet. I mean, cool. I think we'll see.
I agree.
A little bit of turbulence, a bit of volatility, a little bit of horizontal movement up and down to end the year. And then I'm kind of intrigued to see what January holds, because I think it could be, explosive move one way or the other.
Yeah, I think so too. When that 26 clicks in.
Daniel,
how about it?
My opinion about the beginning of the year.
Well, I mean, go ahead.
I do,
if you want to throw it in there. Any comments, Darth?
It's a surprise. Darin loves surprises.
Just happy face or sad face?
We'll talk about it offline.
Oh, there we go.
I would say it depends which part of the beginning of the year you want to talk about.
Exactly.
First quarter. We'll just say first quarter. Somewhere in there.
Yeah, we'll say that.
Yeah, sure.
3 months is a long time.
You'll maybe get to blow out your candles around February.
My candles.
So you'll get your wish around February. That's all.
It's not a wish. It's just it's just continued sweeping on the rug. All right, let's go on to Google. Are they the new Nvidia now in the market?
Government shutdown, but we're not going to talk about that either.
That is true, but we only have till mid-January or something before they have to raise or fund the government again.
Right. They have to go through all that again. You're right. And the Doge thing is still open, but nobody's doing anything with it right now, by the way. I saw that the other day. that program is actually still, it's 8 months to go.
I mean, I view that now as, I don't know if I've said it on the show. I think we might have talked about it, but is that essentially once they kicked out Elon, they probably realized that the grift is so big that they can't unwind it all. So they're better off just trying to inflate our way out opposed to cutting costs.
Yeah, that's what, and now that's why Trump is saying the 2000 stimulus instead of the Doge stimulus that everybody was going to get. we knew that wasn't going to happen. Let's move on to Google, and again, are they the new NVIDIA? What's going on, Daniel?
Yeah, so Google came out with Gemini 3, and apparently, according, I'm by no means an AI expert, but when you look at all the different benchmarks and tests that it took, it topped some of the other top models like OpenAI and other various models on the market as being, incrementally the next best thing. And as far as user experience go, apparently it's, definitely better than what is currently available on the market. And while that's great, it's kind of like whatever in the sense that, new models come out every few months and they're always kind of a bit better than the last, right? The interesting thing is that this model was trained entirely on Google's TPU. So I think it's their tensor processing unit, which was the, chip that they made for their data centers to essentially make, Google and the internet run faster. But this is kind of the first model that has had, very big success, made, kind of that next step forward that wasn't using NVIDIA chips. And so, they're pretty big, reasonable estimate that the reason that NVIDIA actually traded down even on an earnings beat and has continued to trade down days after is that, Google coming out with this new model that's better, not trained on NVIDIA chips, is kind of showing that maybe that there is not the stranglehold on the AI market when it comes to NVIDIA and some of these other players that they thought previously. So I think it kind of like begs the question of, not is this like an AI top, right? Like I don't think this is like some kind of blow off top thing, but is this maybe slow down the trade of, there's going to be one winner take all, that's this thing, or is it, going to be like, actually the incumbents that have the money, they have other tech, are just slowly catching up, and these crazy multiples that were once in play are quite worth it? Because I saw some stats that Google actually is the lowest, has the lowest multiple of any of the Mag 7, and it's actually lower than like Costco. It only trades at like 23 times earnings, and like Costco trades at like 30 times earnings. And so, I think it'll be interesting to see how the market interprets this news. Obviously, Google's ripped, sold off a little bit today, but it's an interesting wrench as things kind of turn down. But not for Google. It's continued to rip. It's up like 77% this year.
I feel like I remember reading somewhere that it was much more developer friendly, like the friendliest of all the ones, and that it's more open to developers, and that was a big win for it. But this would be a competitor with OpenAI, right? I mean, it's in ChatGPT, right?
I mean, I think what's really scaring NVIDIA the most is this is not really an OpenAI competitor. I mean, it's going to put a dent in OpenAI, but it's really just you're asking if it's an AI top. I think it's more of an NVIDIA top because of how, like, you got to think about it. NVIDIA is not really, they don't manufacture the chips in house. They're essentially a glorified broker of these chips. Like, they do a heavy bit of the design and things like that, but Google came in, and I mean, again, I don't think anybody really knew that they were this heavily involved in.
Mm-hmm.
Well, I mean, I guess a lot of people did, because it's the same that's in their phones. The TPU, their tensor chips. It's the same chip they've been using in their phones for years, and they've been designing in house since like 2015 or something like that. But it's just how every single step of the process is handled by Google. They don't have to rely on other manufacturers. They don't have to rely on, like NVIDIA needs OpenAI, they need like TSM, and they need, other than like I mean, obviously they all need rare earths and things like that, but Google handled all of this, and then when they came out with it, they're talking about their performance is like 3 times more efficient per dollar. Their TPU chips are, and I think that I didn't look at the specific metrics, but from what I've heard, they pretty much were either on par with what we're seeing with all of the other LLMs, or I mean, LLMs and the actual GPUs, but they were exceeding in like half of the metrics. So then not only did they match everyone else, at least, you know, on par with everybody else, but the other half of the metrics, they actually exceeded them. So they're already exceeding at a more cost-effective scale, and all of this is handled in-house. Like, I guarantee you that is striking some fear into NVIDIA specifically.
Yeah, competition is good. I mean, it's good for us as the consumer. So and you remember Amazon was doing a chip, and everybody's doing a chip. Everybody's trying to make their own chip. So I mean, I'm all for everybody having a chip, or it's Apple. I'm sorry, not Amazon. Maybe Amazon did too. I don't remember. But everybody's trying to have their own chip, and I'm sure they'll flow with it as well, up to the quantum chips in the future, et cetera. So there's your continued run all the way out on as these guys do it. But their margins will hurt if there's competition, and that's good for us anyway.
So Josh, I just one thing I want to say is that so you said it's maybe not necessarily like this isn't necessarily a big thing for OpenAI, right? Like, it probably isn't going to take a bunch of market share from them. And I don't have a strong opinion on that one way or another, but the way I think the market interprets it is that it actually does, because if you look at the SoftBank stock, it's trading like down 50% and had a huge gap down from where it was trading before the Google news. And that is almost entirely because like 50% of their portfolio is made up via OpenAI that they own. And considering they've sold off I believe they sold off all of their NVIDIA stake. We talked about that like 2 weeks ago. Is that I would say that is like a market speculation that it could actually be a very big impact on OpenAI's business. Not saying it is.
No,
but
I may have misspoke. I didn't mean I do think that it would make a decent dent into OpenAI's specifically because, like we were saying, it like OpenAI relies on Microsoft, they rely on Oracle, they rely on NVIDIA. Google did all of that by themselves. They don't have to, they don't have.
Yeah. So you're saying that they got the chip, they got the model, they got the design.
Right. And so they don't have to do the whole funding, the funding circle thing that all of the other ones have to do.
They sit on like Google sits on like $150 billion of cash.
I mean, yeah.
Like, if they want to give me a loan, I'll take it.
I think Apple's all the same, aren't they?
Yeah, but the difference is, I guess Google knows what to do with it.
And Meta,
That's
and they're
fair.
all sitting on cash.
Yeah, I can't argue with it. Can't argue with you there.
Well, the reason that Meta has been trading down though is that they've like really eaten into their free cash flow for like OpEx expense, and like haven't seen any return on it compared to somebody like Google. So while they do, it is like the market is saying that Meta is doing it wrong. That being said, I bought some the other day because last time it dipped this much, it ripped to the upside. So
There you
How-
go.
We're not
how long
financial
are you
advisors.
Fine with Daniel, but I won't say how much.
I mean, I get it. Like but it just depends on how long you're looking to hold. And what
don't
kind
get
of-
me wrong. I'm going to be watching the chart.
I was about to say, you got to have the itchy trigger finger on that one.
I mean, because I remember I've seen it trade down twice pretty significantly, and neither time I bought, and both times they have figured it out or gone back to their core business and ramped up cash flow. And so I'm watching closely, but I've been right before and never done anything about it. So I'm like, let me take a little bite at the apple and see.
Okay.
Sad face on the sidelines. All right, Royce, you got anything to add here before we wrap up the show with a couple of things?
Nah.
Okay, cool.
Darth
Let's To be continued when he returns
Until
to
I
Earth.
fix this laptop, nah.
Yeah, exactly.
Do you feel left out today, Royce?
I'm sorry?
Do you feel left out today?
A little bit, but that's okay.
He's in his corner, his little Thanksgiving corner, which you'll see later. But you still can do the charts, right? And after
did you share it? Do you see the window I shared?
I did, and so we can go to that, and then we'll say who won this week. We won't, and then we'll do the channels. You'll have to just do it audio, but
I think we should just cut the show short and maybe.
Yeah, of course you do. Of course you do.
Yeah, actually, I'm
All
with
right.
you. Thanks, guys. See you next week.
Bye. Thanks. Bye. See ya.
Let me have my moment in the sun.
You're nowhere near a raisin. Sorry.
Go burn up in the sun.
Oh, at least I'm a grape. All right, go ahead. I've got a sweet. I have a sweet center. Go ahead, Royce, with your Tesla.
Don't say that ever again. Jesus Christ.
And this is how we got canceled. This is this moment right here.
All right, let's go ahead and do it. Crayons and charts with Royce / Darth. I know how hard it was to do that voice, and you just couldn't keep it up through the whole thing, or you would have no voice left. Crayons and charts with Royce, and we are looking at Tesla.
Tesla with all kinds of groovy, gnarly things on here, right? All right, so let's take a look. And are we going up? Are we going down? Well, looking at our weekly chart, I'm doing a very minimalist version of our charts today, folks. I am looking at, actually, let me adjust my compass here because it's not exactly where it should be. That should be pointing at the daily time frame. And that should be pointing at the 4-hour time frame. And then we get back to our lovely view of what we want to see going on. Who's been touching my settings? God bless. All right. All right. There we go. Good times. All right. So this is Tesla. We're looking at Tesla on the weekly time frame, the daily time frame, and the 4-hour time frame. So unlike everybody else who only looks at one time frame and try to predict where it goes, the Arbitrage Man Trading System looks at 3 time frames to try to triangulate what's going to happen next. And with that being in mind, basically, notice that green recycled down at the beginning of September. If you guys follow that up from 331, hey, you have no complaints all the way to our dollar signs. You made it to about 452. Well, shortly thereafter, about October 27th, things went kind of red, and hopefully you were able to follow it down. We see green dots up here. We never want to see the dots intersect the candle. As soon as we see an intersection of the candle, that means we know that more down is coming. So from here, basically, Tesla has begun a brand new downtrend, at least on the 4-hour time frame. And the question is, will it be able to pick itself back up? Going to bring on the band. So you see what we're seeing over here on a daily time frame. We do see that it definitely did right almost as they intersect the candles. We got that nice little red triangle saying, yeah, we're going down. But if you notice, this is only a short-term down. The pink in our Z Pro indicator saying, yeah, long-term, this is still a buy. There may be a short-term correction, but overall, I think we're still going to be okay. Looking at this guy from the weekly time frame, we do see that basically roughly about the same time, that 325, 330-ish landmark, we got our entry with our green triangle here. So once again, got our dollar sign, said, okay, let's get out of Dodge so that we don't lose any money. And so far, 3 weeks of bad, but we are above the black line on the weekly time frame. And overall, short-term and long-term, it looks like on the weekly time frame, smooth sailing. So while we had a few hiccups the last few weeks, we do think overall the uptrend will resume again somewhere around 465 with a top out somewhere around 558 near February. And that's all I'm going to give you and tease at on February. Back to you guys.
The month of lovers. You'll be loving Tesla. We're going to leave the chart up because we'll need this for the next segment and the last segment, which again, I did pull up the scorecard for me to look at with my win this past week. which was for Nike. It puts me at 2. We have
Oh,
Josh
that
at
was the
5.
one that we paid. Okay.
Yeah. Josh was at 5, Daniel at 1, and Royce at 2. So
I'm gonna call it insider trading because you're
tied for second. Yeah, right. It didn't do much movement though.
Yeah, actually, doesn't your son work there? I'm
Yep.
gonna call shenanigans.
Yeah. Yep. I hold no Nike stock. Not talking my book. So that puts us at 1, 2, 3, 4, 5. So that's 7 for the apes, and we have 3 for the quantitutes, and breaks me out of that last place.
Just know that your Christmas bonus will be 0.
I thought it was anyway. All right, so let's move.
Especially though,
if Chase ever releases it.
Cold.
All right, so yeah, there you go. All right, so we can leave this here, and the stock I picked was it's pretty close to APE, but it's HPE, not APE. We're gonna go to Hewlett Packard because they had a really interesting.
I thought you were just gonna be a hype guy.
What is it with you and these boomer stocks?
They had a really interesting, earnings. That's why.
Mm-hmm.
And we're heading into the time when HPs actually sell, which is the fourth quarter with their cheaper laptops. But anyway, let's take a look at this one, and that's going to be the competition for the next week.
Excellent. All right. So I guess you want ranges from me. Why is it always me?
Of course, because you're the expert.
I know nothing. Okay, I guess we'll do this, but just this once. Okay, so looking at this range is abysmal. Nope, not doing it.
Can't do it?
It has about a $19.50 to about $22 range.
Ooh, we're down to the 50 cents or so.
Yeah.
Huh.
Yeah, about that.
I mean, you could stretch it out a little more than that.
You could. But I mean, hey, it's your funeral. Go for it.
Why don't we do like 19 to 23 and just give everybody $1?
Sure.
Dollar
All
Thanksgiving.
Right. Since we're being givers, we're givers.
We're giving thanks.
19 to 23 then.
19 to 23.
All right. Let's get you know what I'm gonna do because it worked out so well last week. Go for it, Josh.
I'll take 22, 23.
Oh. Okay. He's expecting a little more here. And looking at where things are, that means I'll have to take the next down then. We're being the Bulls this week.
Yeah, I mean, that should work out well because keep in mind there's only like the 3 or 4 trading days.
That's true. Yeah, that's true. So it's more likely as well. It'll have to stay up though from here. What's that?
We get a half day on Wednesday.
And they can close at noon.
Yeah, I close it to that whole. Yeah, I think 2 o'clock.
Open Friday.
It might be 2 o'clock.
Remember, if it's Wednesday or Friday.
I mean, if you're gonna go to 2 o'clock, might as well go to 3.
Yeah, but Friday it's open again, I believe. Okay, they have to do the options. That'll be option day. All right. What should I do here? I'm gonna go ahead and say Royce.
19 to 20.
Okay. And
I have reasons for what I do.
Every time.
But I didn't hear you do the ha 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 ha. I got him.
No, because there are things.
There are things. Oh, are you going to show us more now that we've selected?
Absolutely.
He's going to tell us why we're wrong, Josh.
Soft. There's a hard ceiling at about $22, and
I don't buy that.
There's a hard floor about 19. So the odds are in our favor for more down than up.
Well, this will be kind of interesting then, I think. for the shortened days. It'll all depend on Monday, Tuesday, Wednesday. So
Absolutely. And this is my conservative window. Let me bring up my other window.
Darth and his tricks.
I have tons of them. So these are all experimental versions of the indicators, by the way.
Oh, good. So they might be wrong.
No.
Still in development.
Don't have access to them.
You could only hope, Josh.
I'm still confident in what I'm saying. Like, I'm looking at the charts. I don't know what he's looking at.
It's beta. It's beta.
Excellent. Excellent. Yeah, no. Yeah, it's about a penny off. But hey, all right. Yep, that's where we're at.
All right.
Looking at the same charts. All right, 22. I said 22 hard ceiling. Let's see if that still holds true. And this spectrum, 2178 with 2216. Yep. Got a lot of resistance.
Wait,
oh, tight channel.
Okay, well, that's still in my channel. That's fine.
Tight channel.
I mean, so you're saying there's a chance?
Yeah, so you're telling me there's a chance.
This is one of those come down to pennies type weeks, probably. On Wednesday at 3 o'clock.
Yeah.
Right?
All
right.
69.
Yeah. Oh, there you go. No, 1967 for the kids. Let's go ahead and close her up, and everybody have a really good Thanksgiving. Even you, Darth Vader. We hate
my best.
We hate seeing your pretty face this week, though. But you'll be back next Wednesday with your brand new laptop, right? And
yes, HD.
That's right, HD. Your picture might be HD. I don't know. You'll see it in the video that when we release it. All right, guys. Just everybody say happy Thanksgiving. Don't eat too much. May all your clothes fit Monday.
Adios.
You should definitely eat
all
too
right.
much.
See you guys. Yeah, definitely not. Bye.